Despite continuing economic pressures like shrinking military budgets, San Diego's regional economy is expected to grow in 2014. Lynn Research chief economist of Freimanian Business and Economic Institute of Point Loma Nazarene University and Murtaza Baksamusa with the San Diego Middle Class Taxpayers Association are here with the details. Welcome back.
Thank you.
Thank you, Maureen.
The $85 billion federal budget deal, if it's approved, does not include an extension of unemployment benefits. How would that impact the economy here? Lynn, let's start with you.
It might be approved in a separate bill, but if not extended, we will see hardship for those people who have been out of work for an extended period of time. And that's about 40% of the total unemployed. They may be forced to take lower paying or part-time jobs to get by.
Murtaza, do you see that it also has an impact?
Well, the good news, there was a budget approved, so there's certainty. But the bad news is that there are being cuts. Now, there are such a significant number of people looking for a job for a long time. They are the worst impacted by this.
Well, yesterday, bringing it home again, the City Council voted to change a developer's fee that would help fund affordable housing. It's called a linkage fee. What effect would this so-called linkage fee have on the region's overall economy? And we'll start with you.
Well, it will probably not have much effect. What really does is allows developers to be able to build units by leveraging the money that will be generated. About half of San Diego's households that are renters cannot afford to pay their housing costs. It's more than 30% of their income. And hopefully this is a drop in the bucket, but there will be many more units created in the future.
Do you agree with that, Lynn? Do you think helping the affordable housing market, but maybe increasing fees on developer fees could balance out?
Well, if we start at the beginning of the process, we are likely now to see less office development in downtown, which will tend to produce fewer jobs, thereby actually hurting the people we're trying to help. More development now will be pushed out of the City of San Diego immediate region.
Okay. Now, the subtitle of your 2014 economic forecast asks this: is it time to take off the training wheels? What are you referring to?
Well, we've been talking about a lot of stimulus coming to this economy in the last 5 years, Peggy. We had a lot of tax cuts, been increases, and the Federal Reserve has been very aggressive at giving us a lot of money and low interest rates. But now it's really time to see the economy's ability to ride on its own. And we do expect, in fact, the Federal Reserve probably fairly soon to start to taper its purchases of securities and start to pull back the overall punch bowl.
Right, and despite that pulling back a little bit, one gain that you said that we would see would be 28,000 jobs in the area. What kind of jobs and what sectors would those be in?
We think they're going to be across a broad array of sectors, ranging from technology to construction to tourism, so a lot of different skill sets. So the coming year actually should be somewhat better than 2013.
And Murtaza, last week President Obama talked about correcting the income inequalities in this country. What impact do you see that having here, if any?
Well, income inequality is directly related to income mobility, which means the ability of those that are at the lowest wages to climb up in careers and opportunities. So where there is a significant crisis of inequality, as we are seeing, we're seeing stagnating household incomes. So I do not expect the household incomes to grow as much as the GDP itself recovers.
Okay, and speaking of houses, it's a little, the real estate industry and rental markets here. Len, what does that look like for the next year?
The housing market has definitely turned. We saw home prices up 20% in the last year. We're expecting them to be up a little less than half of that in 2014, but we are beginning to see a significant rebound, more home building coming on board, and so the housing sector is really recovering very nicely.
So the industry is recovering, but Murtaza, what does that mean to the average person's ability to be able to buy a home or rent here in San Diego?
Well, I do feel that the Federal Reserve easing up on the interest rates are going to increase. Therefore, first-time home buyers will be affected by that. It'll become less affordable for both buying as well as for
less
renting.
affordable.
It'll become less affordable.
I see. I see. Well, let's end on this. If you had to give a takeaway message for people for the coming year, as far as in San Diego, the economic outlook, what would you say?
Well, I would say that incomes are going to stay the same. Poverty is going to decrease. July 1st, about 100,000 workers in California will get in San Diego will get a raise because of the increase in minimum wage to $8 to $9. At the same time, we're going to see a larger share of the low-wage jobs being created in San Diego.
Okay, how about you, Lynn? Your message.
2014 should be a better year. We should have recovered all the jobs lost in recession by about August or September. The unemployment rate should be slowly moving down. It will not be an easy year, but it should be somewhat of a better year.
All right. Well, folks can read the whole Economic Outlook report on our website, kpbs.org. Thank you both so much.
Most
Thank you,
welcome.
Peggy.